And then there is bonus depreciation, which allows investors to write off large portions of their investment property, like real estate, equipment, machinery, vehicles, and even private jets.
And hey, what if I bought a jet? Well, that'd be ridiculous. If I buy this jet, can I write off my entire tax bill? He's like, actually, that would work.
Now, while that is a wild example, many investors have legitimate use cases for bonus depreciation. For example, investors with rental properties can take even larger depreciation deductions due to bonus depreciation. In fact, it was reported that Donald Trump himself reported more than $1 billion in rental losses on his tax returns to offset his taxes, and a large portion of those losses were directly related to depreciation. And that's just a big example, but everyday real estate investors and business owners can benefit from this as well. Like the doctor or dentist that needs to buy expensive equipment for their office, or the truck driver that needs to buy a truck, or the construction worker who needs to buy expensive tools and devices in order to complete a job, and so on. They all can benefit from these bonus depreciation rules, and this is basically how it works. So usually assets that you purchase are expensed over several years, but the 2017 tax cuts allowed up to 100% of investment assets to be expensed in the first year it was purchased and placed in service. But since 2023, the bonus depreciation rates have been phasing out and even decreasing each year. For instance, it was 80% in 2023, 60% in 2024, and it's supposed to be 40% in 2025. However, it is widely assumed that he will increase the bonus depreciation rates back up to 100%, which could save qualifying individuals tens of thousands of dollars in taxes or more depending on the situation. Plus, certain business owners who elect to be taxed as a C Corp may also be able to save even more money in taxes as well. So like I mentioned earlier, the maximum individual tax rate is going to be 37%. But the maximum C Corp tax rate, which is currently 21%, is likely going to decrease again down to 20% and possibly even down to 15% for corporations who produce products in America. So if we just look at the numbers alone here, business owners who are in a 32% individual tax bracket or higher may benefit from switching to a C corporation to reduce their tax bracket by 10% or more if they have plans to reinvest into their business. But there are far more rules and considerations that would go into a decision like that, so be sure to talk to your CPA if that's something that you're interested in. Now, for people who do not own a business, there are still several more tax provisions here that you may benefit from depending on your unique circumstances. For example, Trump intends to make certain types of income exempt from taxation altogether. Specifically, overtime pay would be exempt from taxes. So hourly employees who work more than 40 hours per week would pay no tax on hourly pay beyond this limit. And this would affect professionals across many different industries like nurses, construction workers, engineers, warehouse workers, police officers, firefighters, and so on. In addition to this, hospitality workers who receive tips would be subject to no taxes on those tips under Trump's tax plan. So this would obviously apply to bartenders, servers, and potentially even professions like DoorDash drivers, Uber, Lyft drivers, and so on who receive tip income. Then there are Social Security benefits. Trump intends to make Social Security benefits exempt from taxes as well, which would benefit retirees who receive this form of income. Now, currently, Social Security benefits are exempt from taxation if your income is below a certain level. But once it exceeds a certain threshold, anywhere from 50 to 85% of it could be subject to taxes. For example, up to 50% of your Social Security benefits are taxable to you if your income exceeds $25,000 as a single taxpayer. And once it exceeds $34,000, up to 85% of those benefits are taxable. Now, Trump intends to get rid of these thresholds altogether and make Social Security income exempt from taxes regardless of your income. Now, with that said, another question that people have right now is, well, when will these tax changes actually go in effect? Well, Let's look at history. When Trump took office in 2017 and introduced the 2017 Tax Cuts and Jobs Act, many of the tax cuts went into effect in 2018, so a year later. So if these changes follow the same sequence of events, then one may say that these changes may go into effect as early as 2026 in that tax year. This would also coincide with the fact that many of the existing tax cuts do not actually expire until the end of 2025 as well. However, the timing of when these tax cuts actually take effect would ultimately depend on Congress and their ability to introduce these bills and pass them into law. And with the Republican control of the presidency, the House, and the Senate, it is possible that they could move quickly on these tax proposals and introduce them as early as 2025. In any case, I will continue to publish new content as more information comes out, so make sure you subscribe if you want to learn more and stay in the loop on this and the potential tax strategies that will follow these changes. And if you currently pay a lot of money in taxes and want a plan that is guaranteed to reduce it, just apply to work with one of my CPAs today at mycpacoach.com.